Good morning and welcome to the Breakfast Club. My name is Darren Hancock, and here on the 23rd of September, 2025. Well, what can I tell you? It is a no-fly zone, my friends, a no-fly zone. Yep, there's nothing there for me this morning. You gotta wait for a macro, wait for a news event, see if we can propel this up and out of 2514. Look here. Oh, we've got to start clearing out. Got to take these equal lows. You got relative equal highs, relative equal lows, and we're sitting right in the middle of it right now. So until it breaks out of this and we get a nice displacement somewhere, then you're pretty much stuck in here. Yeah, I don't see much there. So now you got to say to yourself, how do I trade a really tight day like that? You don't. You look for another market that has some movement. And see if there's price action that's cleaner. That could keep going higher. If we trade below this consolidation and use this breaker as support, is the parent breaker of this run up above here, or these equal lows, I would be looking for a run down into a box right here. It's not 1 minute. That's if we get below this level. If not, still higher. ES is the same thing. You gotta wait for it to break out of there. I was up in the middle of the night. Wicked abdo pains for some reason. But I was up during the London time. That's why I'm a little late this morning. Trying to catch up on a bit of sleep. Now let's look for Already back into this, extending the range already. If we do get a little retracement here, I don't want to see more than 62.83 get taken. Hopefully Craig caught himself a nice little run here this morning. There's definitely one available. Right off here. Trade through it. You come back into it. Go higher. Trade through the mean threshold of this candle. Touch the old high. Keep going higher. This one doesn't, it just opens and closes on the same spot. Watch the premium array. It gets tagged. You trade through it. You come back to it. You get an extension. And then if you stay in that, you'd be in this for a really nifty little run. If you have a higher time frame objective. So would have been here. That would have been the first target to get out of here. I guess you'd be looking for something that attacks back here to go higher. Reach for that premium array. And then once you're through that, look for range extension. And you've got your range extension. Now you're looking for these equal highs above you. And they're pretty close now, 63.60, 63.21. So just aim for this area of interest up here. Morning, Hadi. Morning, Hans, Abs, Rez. Good morning. Good morning. That's what Bitcoin is up to. So this is where we were at yesterday morning. We wanted to see it get above that line, and it didn't. It failed. And we went, we don't want to see this mean threshold give way, and it did. And right there, rolls over and takes the low. So we got out of this trade right around in here. When it came back in, we're on the wrong side of this. Then you close below it. You get an opportunity to take your trade off here and to get back in sync with where the market's going. You're targeting the rejection block, mean threshold, rejection block, and old low. You hit them. Then you're targeting this mean rejection block and old low. You hit the rejection block, but you don't get the old low. It just retraces back in here. You get change in direction. That becomes the bull trap. You trade up to it. It does act like a bull trap. It holds. You wait for this to close below it. It does. So you trade back into it. It does. We go lower. Creates a new low. We got a change in direction. Body trades above it. We wait for this bull trap to see if that holds to run for the next level, which is at this liquidity above the market and this little premium level here. So we're looking for this line right there. You see how it's just coming into busy right there. So we see it change through here. Bear trap or bull trap holds. Go lower. Change in direction. Literally close above that next candle to the left, taps it. We keep looking for premium array. Hit premium array, runs all the way through it and takes the high and hits the next premium array. We bounce around on that array. You look for a little change in direction. There's a small little busy here. We trade below it, wait for this to get taken to the downside. It does right here. You trade back into it. And I don't think, you don't get to tap that. You get the SIBI here. But you do trade back into this candle. Looking for the discount array, premium discount. Box to box trade. You come all the way down to trade through it. It does. It comes back to it. Then we're looking for it to run down. Take out this downside liquidity. Trades back up into the mean threshold of this candle, stays inside that. rolls over, comes down, takes the downside, change in direction, come back up, tap inside it, catch a long. So this is over and over again. It's doing the exact same thing. Doesn't matter what asset you're in. It's the same thing over and over, repeating. Therefore, we think it's the algorithm, right? So that's just a 15-minute chart. We got to wait for it to trade back above this level on a close. So it does right there. And we come back and we just tap it. Well, no, we don't tap it there. See, you don't get in right there if you're looking for it to tap this old high. But remember this little tiny one back over here? I got to stretch it out so you can see it. So I'm not just making this up. It's right there. That little bissy. You draw that out. And if you're not diligent enough to want to find these things, then you're missing some very key data points. Do we trade above it? Yes, we do right here. You got to see this. Do you trade above it? Yep. Do you come back and tap it? Yes, you do. And then we look for range extension. You get range extension. You had it here. It came back, gave you another tap. You take that high, pay yourself again. You don't get any more from that. This mean threshold holds. So then we wait for this candle to get traded above with a close and then come back and get retapped. Trades above it with a close, comes back, retaps it. Range extends higher. Then we look for this candle to get broken to the downside. It does. You trade back up into it and we keep going lower. Mean threshold, we want to see that hold price. It didn't. And then literally traded right back through it. So then you look for this BISI here and you say, I want to see this BISI. Don't forget our little friend over here. I want to see that get taken to the upside. It does cleanly and you're way up inside the premium. So you have to ask yourself, are you taking this and keep going higher, or are you going to wait for a market structure shift? Because this internal range liquidity has already been hunted. Does that make sense? So now you got to wait for a structure shift here. Hopefully that makes sense. You can say, yeah, it's all easy in hindsight, but let's try it. That's exactly what I try to show you every morning, is what we are hunting for, those kind of setups. And there's just a basic few setups in there, but they're repeating over and over again in every asset class. 38. Jeepers, if we would have held that trade on Friday, hey? That one down here, if we would have held that trade and just let that sucker go, you'd be a millionaire by now, a millionaire. I think we were like 15-minute or 5-minute level last. I think it was in here somewhere. Or no, it was over here. I can't remember where it was. That would be a huge, that would be a monster trade. Ah, well. Now we're in a consolidation again, so got nothing for gold. Little piggies are still climbing. Your groceries and your bacon are getting expensive. They're getting higher prices. Sugar still running lower. We called that yesterday. Soybeans hit my 4-hour objective. Live cattle is holding on the 4-hour. Changing direction. Trades through the mean threshold. Runs all the way down to the discount. Wait for a body to trade above here. It does. It comes back into it right there. And live cattle goes higher. So we're looking for live cattle to get up into right where it's at. They're going to sit down on top of these levels here and then use them as support to go higher. That's already taken that one. That's your next level. If we get back through and this is your go no go zone. Not that you guys are trading live cattle by any chance, but if you are, that's the no go line. You can come back and tap that. But if you trade through that on a close, look for another run deeper into this range. Look for probably a retap of these old highs here. I made some more Marmite and cheese sourdough yesterday. So good. Oh, so good. Especially when it's hot out of the oven. So yummy. The pound. What do we have for the pound? All down closed candles. You don't get this one? It keeps going higher. Oh, there's our open. Pound, you're in the middle of that range, so you got to hold off of here. You can't go any lower than 18659. You want to see that come higher, reach back into that breaker perhaps, or these old lows, this consolidation again. Look for 70% of that range, or 62%. You're probably above that already. So your internal range liquidity, you'd like to see that come all the way back down to here, find some support on the lower time frames and start pushing higher again. Mr. DAX, see this level we were looking at yesterday? We didn't want to see it start getting back through here. We got a first little wick through that. Then this level here, we had a body break above this level. You come back, you tap it, push through it. Now you want to see this level get tapped. It does right there. And now you've got further upside hunt right up into breaker. There's all this is down close candles, kind of like what we were just looking at in the British pound. And then run for the breaker. It's hit the breaker, smashed around in there for a little while before finally driving through, taking this old high out. Now it's come back, found support at it, and then all of a sudden it comes back in. So this is the candle you start to get nervous on. You see that where it comes back, it taps it, that's nice, and then starts going higher, and you don't want to see it go, well, why are you coming back down? You just tapped it. You don't need to come down. Red alert. So as soon as you start to trade into the mean threshold of this, you're saying that's my line in the sand right there off that high. And you go, I don't want to see it trade below that. Then all of a sudden it starts to trade lower. If your stop loss is sitting one tick below that low, it ran straight for you there. Feel like they've already got the range extension. That's it. It's done its job. It's got a change in direction right here. Get back in sync with the market. We're going lower. Wait for that level to get taken. Do we come back and tap it? Nope. It just keeps running lower into this breaker down here. Mean threshold holds price. Change in direction after taking this old low. This one's open and closing on the same one here. So if Ali or Hans, if you guys are trading this, see how it literally closes on it, comes back inside it, finally breaks up. Now we're into here. You're looking inside this range here. That's 15-minute as I see it anyway. And you're right up in the middle of the range, so you got to wait for these two levels to break for engaging in that. So there's some, oh, look at that silver. That silver's a straight run now. Looking for our 41.36 still. So far we've hit the key levels we've been looking for silver. This is when you look back and lament, ugh, I should have bought it, but I didn't. And you're looking for this 41.36 for silver. Come on down. Come on down. I was starting to build a NASDAQ, or it's not NASDAQ, but a Forex chart to start looking at some Forex trades. That's what Michael seems to be focusing on a little bit now, going back to doing a little Forex stuff. That's what we used to do back in the day when we first met Michael. That's all we did was Forex. All looking good. Looking good. The banks are on fire. That's good. As long as this holds. You don't see this trade through here. Otherwise, we're coming deeper into this range for 50%, 62, so on and so forth. Internal range. Bank of Montreal is just kind of hanging out there. Where's our 4 hour? Let's do daily. Oh yeah, this was the one I was going to do. Euro. USD. Then we're going to do GBP USD. And we'll do Euro GBP. So we'll do the fiber, cable, and then both of them together. That way you can determine which one of the pairs is the strongest. So you look for the 6 sister with the compared pairs. Compared pairs. The pair being compared, how's that? Morning, Shepherd. Craig, good morning. Sticks, how's it going? Good morning. Chris, good morning. Chris, are you new to our channel? I haven't seen Chris before. Craig, TGT is cheap. D, what do you think on the charts? TGT. What's TGT? TGT. Target Corporation. Let's have a look at it. Let's take a week. I'll do a little analysis here. Just we do have a bit of a stab down in our NASDAQ. Eyes taken, change in direction. I don't even know who TGT is. Well, they say they were target. Oh, Target Corporation. Okay, so if they're on the algorithm, they should act the same way, right? We should be looking for the exact same setups. Doesn't matter what company we're in, and we're looking for this downside to get taken. Starting from way up here. I'm going to do a little analysis on this one here. You see it trade through it. Now we want to see it just come back and tap the low to the half the wick, body, first one, second one, third one, right? It comes all the way into just under the second one and then continues to run lower into inside this range. I'm looking for box to box trading with target right here. There's a little tiny spot right there. Right there. There's a tiny one in here. You gotta see them. See them right there? Those little fellas. That one's hit. We finally run through that one. Look at how many times we come back to it. Twice. Is it a sensitive level? Did that have anything to do with a boardroom meeting of Target Corporation on those particular days? No. They didn't say we need to stop this market from going any lower or any higher. We do not want it to go any higher. Quick, let's gather a boardroom meeting and tell them to stop the market. Right after dividends, fundamentals. Nope. You just came back and hit that discount box is what we're looking for. A retest of that to go lower. We've already ran out the lows. We've got a change in direction here. You've traded above it. You come back inside it. You go higher inside this range. Now you're looking for that level to get taken out on a close, and it doesn't. It just taps it, changes directions, trades back through it, and literally would have caught you here unless your stop loss was sitting above that. You're back inside that range. Box to box trading again right there. Taps it, runs back up to premium box, trades through it, and extends the range. And we're talking about this little range here. Then it trades back down. You're inside this little guy, so you wait for, now you're in this consolidation. You're back and forth. You want to see it trade through it. It does right here on a close, comes back inside it, extends the range. Then you have a change in direction, all the way up inside here. Premium level, mean threshold, you want to get taken. It takes it, finds support at it, pushes back up, extends the range, retaps this old discount box. Becomes a breaker. Now as soon as we start taking out this low, I don't see any setup in there. You gotta wait for this little box down here to get taken. It does. Do we get a trade back to it? Do we trade back into this old low or this old low? With a body trade through it, we tap it right here, and then you roll over and go lower, change in direction. Body trades above it, come back, tap it, start going higher. Wait for this one to get taken. It does. Come back, tap it, goes higher. Run up into this breaker. Its mean threshold, held for a second. We find support off this next bull traps. It holds, goes higher, rejection block, and if I extend that little sucker all the way out, we hit it one more time. Tell me that's not a sensitive area. Tell me that is boardroom shit. It is not. That is an algorithm with a specific data point that it is keying off of. Change in direction, come back into it, run lower. But wait for this one to get taken on the downside, because you want to see this mean threshold get taken. Then look for this breaker over here. See if that holds price. It does. Change direction again. Takes out this little high. Trades back into. Oh, doesn't quite hit it. Nope, does not hit that little imbalance there. You get that little imbalance right there on the chart on the turn for low. We come back into this candle's order block. We see change in direction. Fully runs out. Overlap here. trade back into it right there with precision. Do you think that was a boardroom meeting? I don't think so. Right back to that data point, and then we push lower. So now where am I looking for? Is what you're saying. Well, all that gobbledygook, I'm looking down here. This is a weekly chart, by the way. That's years. We just went through 3 years of target. 3 years, and we're looking for here. And then I'd get down into the one day chart and the 4-hour chart looking for my entry to catch this for a long. What's the dividends? $1.14, and it pays monthly? Or is that quarterly? Yeah, quarterly. So 4 something. Yeah, you get down into $72 and wait for a reversal. If it doesn't, if it takes this on the downside and comes back into it, we're looking for a further rundown. And I'd be looking into here. So those are my discount objectives I'm looking for, and wait for a reversal. And if it takes all that lot out, then it's going to take a new low out. It's going to start heading down to some old stuff. And it always amazes me when people say, "Oh, it's never going to go that low." You don't know that. It's never going to go that low, and then it goes that low. Just stay with the algorithm. Don't say it'll never go there. Watch it, because it can go there. People may have said it would never go from $200 down to $86. Taking 3 years to get there, but she's there. Well, meanwhile, back over here, we've had a You bought some, Craig, this morning? Yeah, I think it's got some more downside, bro. I think it's got more downside. There's nothing in here that tells me that's the bottom yet. But if you're scaling in, that's fine. You're at a good discount level. But they haven't found much love this whole year. On the daily, what do I see on the daily here? I want you to get your best deal here. It is super choppy. It has swept the low. That'd be, some people want to buy that so off a low. Nothing wrong with that. I don't know if you're a long-term holder of that, Craig, but you'd want to see today, you want to see a fair value gap form here, and then tomorrow run through it. The next day come back, tap it, and then you look for this candle to get taken to the upside and find some support with it to run back into that range. It's pretty choppy. Is this the Judas swing for the morning? What have we come into here? 939. 939 is a fill of the 1 hour fair value gap. Busy. That'll take us to the 1 hour. That midnight, hey, look at that midnight open. Using the midnight open range as support, keep coming lower. If we take the hourly, let me take this. I'm going to put all of those in there. Saw Michael do this the other day, and he's right. This is made the main three you look for, but I do like the outsides kind of blocked in as well. Go back to the 1 minute. Let's see the area sensitivity off of that. Off your first presentation fair value gap. Come back inside it. Oh, excuse me. We come all the way down to the 75%. We're having a reaction off of that. A change in direction. Body's above it. You want to see that hold right there. I don't even want to see a wick get through there. Don't like it. I don't like it. It's just messy price action right now, but where do you go from here? If you get this nice little displacement candle, run back up into the old lows here. And you want to see this bull trap hold price and roll over and come lower. That would be your CAM Model 1 entry right up to here. So as soon as it touches those bottoms there, right into this order block breaker here, takes out this little low. You want to see it hit that, roll over and come lower. It can come all the way up into the closing of that SIBI and drive lower. That would be a CAM Model 1 on a 15-minute chart. What is the tight range? What is the tight range on ES and NQ overnight mean? We have news. We had news this morning, did we not? 7:45. It's probably just waiting for the news. Then mind you, those are PMI. PMI was at 9:45. So that starts to move price right before the news release. Now, as a macro, you want to see this hold and go higher, or this to be broken to the downside, uses support and go lower. So they're probably just holding it in this range for news. I don't know. I don't know what that is. What the algorithm, why the algorithm's hold there. If it's marking time, you cut this all out and look at the high. And then when it finally breaks through, then you disregard all this mess inside here and just look for the most recent breaker below or the swing below. And that swing high, and disregard the rest of that stuff in the middle. So we're looking for a retest of that's 73 at 973 level. I don't like TGA as a bust, but I bought some. Yes, small layer TGA chart is awful low price action, so it looks like a double bottom. Oh, that's all retail. The old double bottoms, hey. I have 940 candle marked as first fair value gap. You have a 940. This one here. So unless there was, if there must be a slight imbalance or a slight difference between this candle and that candle. So this candle, this 935 candle and the 936 candle, there must be a slight price difference between the close and the open, which makes that a price or volume imbalance. And then that volume imbalance, and you have to include them both. And that's what whoever made this particular indicator has put this as the first presentation. Who else has that? Anybody else have a different one? Are they taking this 940 candle? This one looks a lot cleaner. Is 71.5. Still not there yet. And they may go, that's close enough for me. But it's not a CAM 1 entry. But we have come back and retested this below and the open. See the open of this breaker? Those are 1, 2, 3 levels of sensitivity, 3 data points to look for, and you've got them right there. We've extended the range now. Now you've closed below this level. That's the level you're looking for next, and it's hit. But now we've filled this fair value gap. The hourly has now been filled right there. I don't know why it was up there. Right there has been filled. Now you want to know, do we get a nice snappy reaction off of that? We create a fair value gap here. Like if that just sits here right now after taking that low out inside that 1 hour BISI and then creates a fair value gap in here, we start to trade through it. This becomes the bull trap. If we can get through that, get on top of that, this would be our 10 o'clock turn. And look for liquidity above the market here. So this is all faking people out, thinking we're going to go lower. Catching these people offside, taking them out. So now my area of interest now becomes this first presentation, because that sits right into the 73 level and comes back into that consolidation. So if we can get through that on the other side, eat this through this mean threshold here as well, then that becomes a significant box for me to go higher. So there's your fair value gap formed. We've just done an institutional order flow entry drill for continuation on the downside. I'd like to have seen that come back up into 958. Tap that and roll over. Mine's different. You have 940 as well. Fair enough, we'll use 940. I'm okay with that. It looks a little cleaner than this one. That's because whoever designed the algo or their indicator looks for these imbalances as well. You can see there's a clear one here. There must be a small, tiny one in here. So now if you're going lower, you'd say, come on, get up into this little box area right here at 958. And if you're looking at this open range as taking people on the sell side and then ripping back against them and taking out this whole upside portion here, which is this premium box, you want to see it rip back against them. So I want to see this act like a fair value gap here. Or you could get 3 stabs down and then wait, and I still want to see this level get taken on the upside. Some retail stuff does work. Good for you. So we're still going lower. Nothing's giving us bullishness now, so don't marry the idea that it's going bullish. We're through that premium or that BISI on the hourly. We're starting to poke through that now. Wick's doing some damage. You wanted to see it tap there and then start to leave to go higher, and it's not. So right now we're not going higher, obviously. And we've hit a key level on the hourly, so the next level for me is 926. 926. That's the next area of sensitivity for me. $926.50. And then you're looking for that silver bullet. Here's your 8 or 10 p.m. or 10 a.m. news. So even if you're looking at this particular macro at 950, you want to see this level get supported to the upside and go higher. Or if you're bearish, you want to see this level get supported on the downside and go lower. If we take out this low, you want to see it get a body below it, come back, retest it, keep coming lower. So there's a small little entry there. And it's at news time, so does that just help to accelerate it lower? I'm looking for that 926.5 level, and then I'm looking for 919.25. $852.75. $852.75. Yeah. Yeah, I've got that as a 852. $852.75 to $833, big figure. Don't overshoot your arrays though, Hadi. If it turns on you, you'll get frustrated because you're like, I saw that one coming there, right? It's got to get through that hourly order block first, that up close candle. So there's 3 arrays inside there. You want to see if it closes below the mean threshold of that. Then you can say that's a good target to aim for. And we want to see that BISI now get validated with a closed candle. And right now, we don't have a closed candle below there on the hourly chart. It's literally closed on it. It came back and it's halfway into the wick on the hourly. See how if you take this wick here, draw it out. See how we're at 50% of that, 75% of that. We've just tapped both of those. And we're leaving that last little portion of that wick open. And now we're returning. We're getting a kick off of those. So don't ignore this before reaching for that lower objective. Otherwise, if it does go through there, you'll ignore this every time, because that's all you'll look for is that target down here on the hourly. Does that make sense, Adi? And then you'll go, one day you'll just get caught on this and you'll go, why did it reverse? Because you keep ignoring this. So don't ignore all that stuff that's sitting inside there. And once that's broken, then yeah, you can say, yeah, I was right, but that's great. It's because those particular arrays were broken. But watch how it acts off of those, because they're important for you to keep an eye on, if that makes sense to you. Or you can carry on looking at that one back down there. Got no problem. That's a nice little area to target anyway. This first discount box down here at 830 to 841. That'd be the first target discount box, which is also inside this level here as well. We also have a breaker. We also have old highs. So there's lots and lots of little data points along the way down here. But if that holds, then you'll go, oh yeah. 4 hour is still holding on it, isn't it? The 4 hour. Sitting right on the 50%. Yep. And that's at 930, right? And it's literally sitting on 930. Just tagged it perfectly there. So we do have overlapping arrays on there as well. So kind of keep those in mind when you're looking at those lower objectives. Is it a straight run, or are we going to get some bouncing along the way? Yes. Yes, I'd like to see that too. But if that little bearish breaker holds price, or that higher time frame 4 hour 50% consequent encroachment holds price, which it seems to be doing perfectly right here off this 930 level. Now I'm watching to see if this bull trap holds price, and I'm looking right here. So, and they're overlapping. So you come back, breaker inside a fair value gap for a run on the highs. And because it's inside this range, and in order for this to be violated, you have to start digging into that. You're in the premium portion as well of this breaker. So I'd wait for a market structure shift with a breaker and a fair value gap. So this is what you guys talk about a lot with your own setups. I know Ali looks at these. You talk about this market structure shift. So you want to see a break low, create a fair value gap, and a breaker, break market structure, use the breaker, fair value gap to push for higher prices. Yeah, looking for a long. It's got to break this high though. That's too tight, too high in the premium of this range here to mess with trying to catch a little bump off of here, come back down. You'd be bumping right inside the mean threshold of that candle of that bull trap. So I want to see it just slowly just kind of creep past the bull trap. Don't set it off and then start running higher. So just wait. Let me close this one out so we have less noise on our charts. We're just reclaiming this SIBI right here. It's a fair value gap. It won't become an inversion until we get above it and come back below it. And Michael pointed out something I have a habit of doing is I call everything, once it gets broken, I call everything an inversion. It's not. So sometimes you just get it. If you're looking at the absolute proper terminology, looking for a reclaimed, like if you go through this, in other words, this BISI here, if I run down into it, it's a fair value gap. I get through it, it becomes an inversion. But if I go back through it again and come back down onto it, it's now a reclaimed fair value gap, the BISI. So it's now a fair value gap again and going higher. I just, as soon as it breaks through it, I always call them inversions. The proper terminology is it's just a reclaimed fair value gap to go higher. Once you get back through it again in the direction that it normally supports a fair value gap. Like this is supporting a fair value gap here, and then roll over and go lower. Here, go over, goes through it, comes back to it. Now you start to get into an inversion to go higher. Then if it rips through it again, it's reclaiming it one more time to go lower, which is a key level we look for when we're looking for resistance. High taken, change in direction, come back inside, stop right there, roll over, come back down, or start popping through it. And we're back up inside here. Remember this one over here? It's silver bullet time, my friends. It's silver bullet time. We're through it now. I want to see that go higher now. Come back, retap it. Now you can go higher. Thank you, thank you. Takes the high, pay yourself. If you just got in there, pay yourself. Move to break even. You don't want to see it come back in here now. You want to see this high get taken and get through here. Start digging through this. Start accelerating through this consolidation. Using the consequent encroachment. Keep coming. It's a nice little silver bullet right there. See how you're up inside the premium portion of this right now? So that would have been a nice little discount. See where the discount is here? We're literally right on the 50% of it, right there. Now it's running through it. Not what you want to see. That's why you pay yourself. Move to break even, comes back, takes you out. Yeah, you nibbled a piece off of there, and you're in a consolidation. It saved you. That rule saved you. You go, well, I may not have entered that. That's fine. I'm just looking at perfect data points, that's all. Which side are you staying on? How is it going to extend the range? It broke above there, so I'm looking for range extension. It does. It gives us range extension, reverses, and then trades back through that level. Now it's trading back into it. We want it to come lower. So now you stay on the horse. You see how it's coming lower? Now I want to see it take out this low here. And there's this tiny little imbalance down there. Yes. Look down here. And ba-boom, done, right? So that's just staying on the horse, man. That's just staying on the horse. You can see where the market's turning around on you. And inside these little consolidations, it gets really kind of choppy. So wait for market structure shift. You can see the importance of that, Hadi. Even though you can stay on the horse here and pick these little points out, are they really worth putting yourself in that kind of a position, right? So we hit that little discount area. Now you want to say, in order for me to continue to want to go higher again off the higher time frame, you want to see that still holding here I want to see it shift above here and take out this candle here, because we've worked all inside this now. So we've got a small consolidation. You want to see a nice displacement candle, get above that, come back, find support inside that candle. No more than its mean threshold, or you can tap, because this candle makes up this breaker here, sits inside that. You'd have to give the whole thing all the way down to here, one little tick below the low. That's what the stop loss would be, and you'd be trying to catch along here. So it's just a matter of patience. But if you're practicing this to stay on the horse, you should be able to catch each one of these turns. If you're just sitting here waiting and ignoring your opportunity to learn and watch the algorithm as it functions right inside these tight little ranges, you're missing a golden opportunity to catch some practice here. $972, Russell, good man, good man. But practice this. Still keep watching this, Russell. Keep looking at this area of sensitivity. Once you trade through it, look for that area of sensitivity again. Look for this level to look for a run above this high here. Don't forget rejection blocks. If it rolls back over and starts to eat through this immediate rebalance, this becomes a SIBI here and a BISI overlap. See how they're overlapping? This whole area from here, so my data point is there and there, because this one makes the BISI and this one makes the SIBI inside this tight little range. So I'm looking at specific data points. So there, where these two intersect, and then there. So there's three important levels right there. And if we trade through that one, look for a rundown into 50% of this wick and lower. And if we take out that one, then look for a run on the highs. So watch that level right there. In your head, there's tap it. Now you can run back all the way up to this data point. There's the midpoint right there. So we use the midpoint to come lower, or just keep running back and forth in this consolidation. I'm looking right there and right there. So we've got that one. I'll look for this one here. It's not frustrating, Russell. It's a beautiful thing, man. This is a beautiful time to practice. If you're ignoring the charts and walking away, you're missing a great opportunity to watch exactly, practice these data points. You don't have to put a trade in here. It's not frustrating. It's great. It's great practice. Super cool, man. Super cool. Look at that. Didn't quite hit that one. Just shy of it here. Are we going to hit it now? We're kind of stuck on that midpoint. Come on, drive through. There you go. Finally got it. So we hit from, so if that was box to box inside here, it'd be like point to point, point to point, using the midpoint right there, the overlap. So those are 3 data points just inside that little piece there. Sexy, huh? It's so cute. It's so awesome. It's awesome. Let's find something exciting to look for. You guys let me know if it gets above the market structure shift. So when we last left our intrepid travelers, they were heading for box-to-box trading. So this box, we didn't get a chance to validate it unless you're looking at this close here. And we've had this a few times now where it closes right on the level we're looking to See it close above and then come back and validate this level to go higher. It closes right on it, opens on it, runs down inside that fair value gap, runs to the box trade, hits it. Now we want to look for this level here to see if we trade through here. This BISI has to get broken to the downside. So there's a fair value gap here, buy side liquidity, sell side inefficiency. We've wicked all the way down into the rejection block. And now you want to see it pop through here and start running back up into that premium level. This sell side's been really worked. Premium level hasn't really been worked too much. So I'm looking for this to get on top of this and start moving higher now. Find some support off of this as a ledge. You climb above it, put your foot on it, start pushing higher. And then you're aiming for that hole in the wall to throw your pitons in there and pull yourself up, get up on top of this little ledge here. Then start pushing higher. That's what I'm looking for in the DAX on a 15-minute chart. Gotta love 20%. Gotta love a 20% divvy, man. It's almost 2% a month. What kind of dividend do you get that pays you 2% per month? Was 1 for 2 yesterday. Need to manage mental game. Russell, I was like, you down, mouth brother. There's the mean threshold. You got this. Go in with a positive attitude. Yesterday, scrub it. You should have made notes. You should go back and do some journal entries and approach yourself with some love and kindness. Do not go in there with negative self-loathing for your trades, because all you're going to do is reinforce in your neural network that kind of crap, and you don't want that. See how this level right here, like if I take this candle right here, look at how sensitive this little data point is right here. Look at that. Boom, boom, boom. All those bodies just banging on that. We're hammering inside this level. Wants to go hit this, roll over and go lower. It's hit it multiple times. We're drilling into it and we're not giving it any downside. We just keep drilling into the upside. It's a very strong point. Pop through that, and then we get through this little puppy here, and then we get to drive that baby higher. This is our first fair value gap. Is that your AGNC? No, that's not AGNC. I haven't looked at AGNC. That's my DFN. That pays 22%. I'm in like way down here. Right here. That's my entry at 546. Down here. And I'm already up 23% on that. And it's still paying. So relative to this, if they start increasing the dividend now, relative to where I bought it in, it'll be a huge 25%. So I'll get 2% per month. That's why I like these as sources of income. This is where you get your paychecks from. Day trading is fun. This is where you make your wealth. And long term. You don't sit here and fart around with it every day. You trade it. You see it enter. You take it. You wait for seasonal tendencies to fire off. And you catch yourself your run. You just keep an eye on it for the seasonal lulls. And if it just keeps going higher, stay in it, man. Good point. Sitting on my hands now. EFM. EFM. What's EFM? Oh no, that's DFM. It's a split fund. It's a high risk, so be careful. And catch it in April, May. April or March, April. This is a good time to look for that. TSX. Yes, trade for income, invest for wealth. Yes, thank you, Darren. Need, invest for wealth. This stuff's fun to play in because this is a great place to practice, because when you want to invest in some long-term investments, if you haven't practiced here down in the gutter, in the dirt, in the fray, as it were, if you're not in here practicing this, man, how are you going to trust your long-term investments? If you're trading on a daily chart, how do you trust those? You just got to wing in a prayer. And if you're not looking for key levels to get broken on the long-term investments, if they get broken, then you move to the sidelines. You take your money and move to the sidelines. And sometimes you'll be in a trade for a couple of months and then you move to the sidelines. But if you've made your 10%, whatever your goal is for the year, if you have a 10% return on equity in the year, this is just what do I know? I'm not a financial advisor, so don't take any stuff that I tell you as gospel. But my theory is if you've got an overall investment strategy of 10% you want to make on your portfolio in a year, 10%, depending on what your portfolio is, could be a sizable income. And as soon as you hit that objective, move to the sidelines, leave a little piece on to see if it continues to grow, but keep your 10% objective, move to the sidelines and wait for the next opportunity. And that may not come for 6 months, but you've got your trade, you're in cash, you're sitting on the sidelines and you're waiting for the next opportunity to say, look, I made my money already. While everybody else is bashing around trying to get nickels and pennies out of the market, if you've got a nice, keen, strong strategy and you're watching and studying each one of these freaking data points and you're looking for support and resistance levels that support or resist at your level, not, Wyckoff's or whatever the heck those other ones they call support and resistance from a retail perspective. If you just look at it as this is a specific level I'm looking for. If I can get in there, it's a seasonal tendency. I'm looking for this turn on this day. If I hit it, I'm long. Dividends. So every month, your entry point drops another 2%, in terms of the overall value of it. So this is how I kind of look at it and say, if this was a $20 stock and it paid me 10% per year, so it gave me $2 at the end of the year. And every month I entered in at $18, let's say, or $20 for the stock. And it went down to $18. By the end of the year, I'm still break even. I still gave you as long as the dividend pays, you're down to $18. So that's my year starts off with my line moving down to $18. That's my break even point, right? Every month, it just keeps dropping down. Your break even point drops lower and lower and lower. So then as price starts to run through you, your level, every time you get a dividend payment, unless you're putting it in your pocket or reinvesting it back into the stock, you're getting your break-even point is getting lower and lower till it gets to the point where if you hold a company for 5 years, it's paid for itself. 5 years at 10%, 50% of that stock. So it'd have to be dropping below $10 just to break even after 5 years. Now that's a long-term investment, but it's a simple way of looking at how much it drops each and every month. Depends on the dividend, if that makes any sense. So mean threshold, hold. We're drilling back into this level again. Lots of liquidity sitting in here, little pool of it. You got to go. See you later, Hadi. See you guys soon. Yeah, we're not too far away now, hey? We're like less than a month. We're like 3 weeks away from popping in, see my buddy Hadi and Rez. We're the new guy, Rez. We get to see Russell. It's kind of exciting. This is when I like hanging out with my wife when she's doing her work in another province or country. It's always fun to go meet new people. I am short using hourly fair value gap bottom as stop loss, looking for a bump down to go to break even as it's a risky entry. Ooh, you're in the short here off the hourly? Nan, be careful, bud. If you're shorting that, you're shorting it off of a 4-hour strong point or 4-hour data point. If you're using this as a stop loss on your hourly, this is what you're using, correct? You say your stop loss is on the low and you're going short. I'm short using hourly fair value gap bottom as a stop loss. Oh, so you're already through, you're already taken out then, is that it? Yeah, no, see, if you're looking at the hour, if you're on the hourly chart, you want to see an hourly close below that level for that to keep coming lower. And you've got this order block here we talked about finding all that support at. If you're heading for that level Hadi was talking about down here, I cannot stress the importance of making sure that you look at all these data points to see if they hold, because if they do, you're not going to get this level. You got to be watching at those. I think a problem people have is they overextend where their PDRAs are. If you want to look for confirmation on that all the time, great. If you don't, you want to ignore it and you want to run for it and it turns against you, just know that this is the area that it was doing it. It wasn't just some random idea that it turned on you. You have to take into account that candle. That's just my thoughts for what they're worth to you. I'm not trying to tell you how to make your trade, just telling you what I'm looking at. So you see how we're just right off here. We're banging on inside the mean threshold or consequent encroachment of that wick, or the bottom 75. I think we looked at it as when we took that wick and split it up. That was 25%. That was 75% of it. And we're just not giving up that 4-hour equilibrium of the BISI. You got stopped out with a small profit and good, man. If you made a bit of money on that, great. So ask yourself, where did it fail for you? Go back through this mess here and look for specific points that support the theory of inversions, fair value gaps, order blocks, imbalances. And if you don't want to do that, that's fine. But I would obsess over why that trade was failed for me. And is that a stable, strong, achievable strategy to use every single time? Those two wicks are my target. Equal highs. Right here. Get Derek out there in Spain. You should be going to bed, mister. Or you should be going to have lunch. What is that over there? 8. Yeah, you're probably looking at lunchtime. 2 in the afternoon, something like that. Derek's kicking back with his little laptop, sitting at a little Spanish cafe while we're all just waking up. He's enjoying the sunshine and a nice Spanish day, and he's reaching for, I can just see him sitting there sipping a little coffee at a cafe, just tapping his little laptop. Oh, I'm going to buy here. Sip, sip. Hello. Good morning, por favor. More cervezas. Ah, that's Sandra. Here you go, Sandra. So Sandra, that's important. So we gotta, I want to review this with you because I think that strategy you're using here is not, honestly, not a strong one unless you've got a different idea than I'm looking at. Look for those higher time frame ideas for support or resistance. And if you don't get a candle that closes below that on the level, the time frame you're trading on, then don't look at that as a short. Look at that as a very support or sensitive level that could hold you back. So wait till you get confirmation of that, and then use that whole level for support if you want to run down to the level that Hadi was talking about earlier. Yeah, I'll be more than happy to discuss your strategy with you, Nan or Sandra. I can see Derek participating in running of the bulls with his coffee running down the road. Sip, sip, sip. Oh, this is fun. Now Derek's got an English accent. Oh, I love this. Oh, I'm from America. Running of the bulls. This is delicious. Sip, sip, sip. It's like 4:30 p.m. here now. I could see Derek smuggling a Spanish bee home. He's got in this little pocket buzzing away. Bring home a Spanish bee. Teach your hive a little Spanish. Yes, it was a short, risky trade. I looked to go break even immediately to protect myself. It didn't work, but I didn't lose my shirt. Good for you. So you got to ask yourself, is that a reliable strategy? Or like, why are you rushing to put that stop loss in quick? Unless there's a specific data point, I'm all for it, man. I love the fact that you can snap that stop loss in there real quick and go, it better not trade above there. I demand that from the price action. And if it comes back and takes you out, go, oh, I took a chance right there. That's the point. I did not want to see it break through. Then you don't need any work. You know exactly what it is you're looking for. Demand that from price action, and you snap that stop loss. Some people go, you pull your stop loss too quick. Well, yeah. If you're not looking at that same data point that I am, then, and I don't want to see that get broken, then that's why the stop loss gets snapped real quick. And if it comes back through it, you go, okay, it's doing something else. It's not acting the way I want it to act, because we've given you some levels of precision that are like crazy precise, right? Like, look at how many times this consequent encroachment of this has been hit. So you got 1, 2, 3 data points. Like, look at how often they're hit and supported. Look at that. That's craziness. I'm trying to use my phone one trade at a time. That's hilarious. Derek, I've still got a picture of you running with these bulls chasing after you, trying to thumb your phone, making a few trades, looking back over your shoulder. Tap, tap, tapping, trading. Oh, man, I should draw that picture. Imagine Derek running down, the bulls chasing after him, or sitting on top of the bull's horns, trading. People running and scattering in the cartoon. We're eating through a bullish fair value gap. We are eating through a bullish. We're eating through a bullish fair value gap. What time frame are you on there? And so far, the bearish is respecting on the hourly. This could be a turning point. Russell hit the high and now turning around, eating through the regular trading hour gap. I'm sorry, I don't know what you're talking about there, Sandra. I see how it's creeping down as NQ holds price. This is definitely holding you back here, but it's not acting the way you want it to act, right? So typically you'd want to see this come back in here, tap this right here on this candle, tap that, and then just leave, and just leave. But it's, see how it's just come back, hit it, then hit it. It just keeps hitting it, but it's creeping up. Then it ran back down for rejection block again. At least this one, not that one. And then we come back up and we're drilling into it again. And we have another little bissy here. There's a small little sibby down here. So right now, inside this range, there's your discount. There's your premium. And you want to see the premium whole price. And you want to see this climb up on top of here still. So I'm still looking for this to go bullish. It's still relatively bullish inside this consolidation. We're still looking at slight bullishness for me. on the 1 hour chart. Yeah, so what you see here, Sandra, is a consolidation, right? See how we've got equal lows here? A nice little pop through that. You want to see it come back up into that. So that's that area we're looking for here. I want to see this hit it, roll over, and start coming back down. So but as soon as it hits these lows, you're looking for any opportunity to see a change in direction, supported, and then to keep coming lower, and then break this low. Okay, and then use this BISI as support to come lower. So that'll be like a CAM 1 model entry you're looking for there. If it starts to eat through that, eat through the mean threshold of this, and we trade back above the 50% or of the 3-hour candle on a close in the 15-minute chart, then you're looking for the equals highs above you. That's how I'm looking at that. So inside this range here, you're stuck inside this, and you're looking for this to roll over and go lower. So if you're going to go short, don't go short there. Go short up here. That's inside a premium portion that you want to sell for a discount. If you're aiming for Hadi's level down here. Oh, sorry, this one right here is what he's looking at. Does that make sense? I use 9 and 21 EMS for those risky entries. 9 and 21 EMS. Oh, you use moving averages? Wow. I built so many bots around moving averages, and they're never consistent. But if you've got 9 and 21, if it works for you, don't look. I'm not judging. I just never could find consistency with moving averages, and I built a lot of bots around that. Why is price sitting pretty much at 10 a.m.? Does it ever do that, or just when I'm in Spain? It misses you, Derek. It's just wandering around aimlessly like a dog through the house, sitting on your kitchen table, frustrated that you're not around while you're out in Spain enjoying yourself. Ouch, I was just gored. Oh man, I got a picture of you. I got a mental picture of you with your cell phone. So you understand that, eh, Sandra? Okay, good. Because you basically hit the bottom. Here you want to see support on, and you're getting that. See the bullishness? Everything in here, that was finding support. You're slightly bullish inside here. Now you've got a nice displacement candle. That looks great. Now you're looking for this level. Now we're right back up into that. See how we're now hitting the bottom of it? Right there. That's that 73 level we were talking about, right? See how you hit it? Now look at the sensitivity. See, it's just tapping it. And I want to see if that breaker here holds price, or its mean threshold holds price, which is also the top of this first presentation fair value gap that we've all agreed is the first presentation. And then we want to see if we start getting up on top of this, eating through that, finding support at this, and then running higher. If not, this is what you're looking for, Sandra. So now you're looking for your 15-second chart, and you're looking right there. See how we've traded below it? Tap into it. Now I want to see that come lower. There's your 15-second, giving you your reversal. CAM model 1, perfect entry right there. So if you're pulling back inside here, 50%, 62%, move your stuff. Your stop loss will be sitting right above here. So it's really tight, because that's your specific point you're demanding price gives you, right? So looking for this first little box to box trade in here on a 15-second chart. If you pull your fib tool in here, if you're in a take profit model 1 trade, you're like this. So if you entered in right there, 50%, you're break even. You pay yourself a little portion here. Now you don't want to see it come back into here. You want to see it keep coming lower. That's that small little range. If it rips back through you, you just go, well, I nibbled a little piece out of that. So keeping in mind, that's where you're looking for right here. Now look at this candle. Look at that candle. We've now got a little support level here, right? Now coming lower. There you go. Box to box trade. Done. Dusted. That's my classic box to box. Now you want to see this level giveaway, Sandra. See how we called all of this before it happened? You heard me talking about it. There's a cam model. You heard me talking about 973 level. Wait for the reversal. Right there's your entry. Right there. You've traded through it. Pay yourself. Now you can move yourself to break even with a little bit of profit. You paid yourself there. Now you sit back and relax and enjoy your trade, Sandra. And that had nothing to do with moving averages, by the way. If you find yourself, if your moving average now coincides with that perfect spot right there, and you find your 921 works, and it works on a 15-second chart, and there's your entry, or you're using your 921 EMAs, and you're looking for an entry point, is supported by our little principles that we look for every morning, then now I want to see this level here, hold price right there, roll over and come back down. If we close above here, we've already taken this low. So if we close above that, then we're looking for a run back inside this range. This is the bull trap. You want to see hold price. That's why your stop loss is sitting right here now. Because if we trade back through that level, then we're looking for a premium and then a continuation on the upside. And we forget about this running lower right now. But right now, we're still looking for this to continue going lower from there. Yeah, pickpockets really, and to anybody that bumps into you have to grab a hold of them and say, if you've just, I'm going to check my pockets. If you've taken my phone, I am going to start beating the crap out of you right now. So don't move. They've already passed the phone off to somebody else, though. That's a nice little tap right there. Tap and go. Sandra, are you in on this? I gave this to you like right at the freaking, right at the pip, the handle, the contract. You should be break even, just giggling to yourself right now. Your next discount box, you're looking for 938 all the way up to 943. Hit the take profit with those equal highs, EMS or EMAs with fair value gaps, a pretty good combo. If they work for you, Sandra, keep them, man. My dear, I don't go down to 15-second. 15 and 5 minute are my favorite time frames. Oh, okay. Then you would have missed my perfect entry. Fair enough. You're going to wait for your 5 minute, then you're still not in this trade yet, because 5 minute is way too messy and 15 minute has nothing for you. So you're going to still wait. Unless you're looking for this kind of thing here. And that was your entry right there. This is the reason why you go to the higher time frames. You use the higher time frame data point and you go, that data point, if it holds, I should see on the lower time frames a turn or a change in direction that shows that that was my data point. And that's it right there. Comes back in, gives you an opportunity to get short on that. Aiming for box to box inside internal range liquidity, then seeking external range liquidity, looking for continuation on the downside, reaching into our 43.39 level, whatever. We've hit that now. And now you don't want to see this break above here. So you've gone from box to box, range extension, box to box. Hit it right there. And now I want to see if this bull trap holds. You see Derek running down the street and the bull turns and looks for somebody else or continues to chase Derek. So we see Derek sitting right above here. The bull sees him. Comes charging right up to him. Mean threshold. I know you're not on a 15-second chart, Sandra, but I don't see your entry still not here on a 5-minute yet. And it's still not, unless that's your entry right there on a 15. I got in on 5-minute wick down to the volume imbalance. A 5-minute volume imbalance. Where did you get in, my dear? Right in here? Is this the imbalance you're talking about? Look at the 1035 a 5-minute candle. Here's the 1030 right there. 5 a.m. or the okay. Where's the 1030 5-minute fair value gap and turned around on a 5-minute? I don't see a fair value gap in here anywhere. I don't see it on there, Sandra. I don't know what you're looking at, but if it worked for you, run with it. Oh, sorry, 15-minute. This one, you catch it there, fair enough. If you took that, that's cool. I can go with that. I like that. That's bounce off here nicely. That's a beautiful little run, and you run it down into 15-minute. Okay, so you're running it down from there. Great. Rejection block, pay yourself. Move to break even, pay yourself. If you're staying on a 15-minute time frame now, leave it there. You don't want to see half this wick here now. See this one? Watch this. You want to see 25% of that hold and roll over and come back down. That's what you want to see. That wick, hold price back. You do not want to get above 50%. So if your stop loss, if you're running in here, your stop loss was sitting above that, you can move it into profit and say, I do not want to see it get through here. Pay yourself at the rejection block there. Start looking for your next objective here, and then the runaway. This could be the next price leg lower. You know what I'm saying? Like if you look at this here, if you take it from here to there, and then from there to there, where's my downside objective? Right there, 895. Notice how our bull trap is holding price. It allows you to go all the way up here, give Derek a little poke in the butt, and then roll over. The bull likes to blow snot all over you, then turn around and run back and chase somebody else. So the bull trap is holding. We did not get a body close above that high. You have wicks, but no body. So change in direction. We've taken out small little highs here. Change in direction. Trade back into it right there. That's an imbalance. You have to include it in here. It's tapped it. Running lower. Watch this mean threshold to give way. Let's tap the mean threshold. So you're between here and here right now. Then you're between all of this and that. So I'm looking for 951. Oh, someone's tippy tapping on my door. All right, now we're above there. So now you're whatever you're running for short here, disregard that. And now I'm long. Back inside this range. I am off of here. You want to see it retap this old high here. You can come all the way down into this. That can swing all the way down into here and then go higher. And I'm looking for this level from here to here. So 963 to 971. So that little short stint you had running down there, Sandra, I'd be out right now on that. We hit the fair value out of turn. Sorry, 1550. I got to get the kiddo off to school. See you later, D. Thank you so much for the teachings today. You're very welcome, Sandra. You're very, very welcome. As long as it helps. I don't want to confuse any of you guys. Sometimes you have your own way of looking at the market, especially if you're a retail person. You have your own way of looking at the markets. A lot of this is going to be confusing. And a lot of people just don't accept the fact that there's an algorithm driving the market. And if you don't, you're going to find this really difficult to follow. Really difficult to follow. So there's the 963 right there. See that data point? There's no randomness there. That's not just some weird little, oh, it just decided to turn. That's a data point, man. I thoroughly believe that's a specific mathematical formula that brings us there, and it spools and moves to the next data point, and it's constantly searching out previous data points back here. You know when Michael used to talk about that 20, 40, 60-day look back? It's the same with candles. Look at it. He doesn't just say that on a daily level. That's a fractal idea. Any ideas he gives you are fractal across all time frames, all asset classes. If it's truly algorithmic, everything he's giving you is on the all time frames. It's fractal. It's happening on all time frames. The same kind of spooling is happening. Not, you won't see the exact same setup on each one of them, but the same kind of data points that are arranged on the lower time frames are the same as the higher time frames. And you may sit there and say, no, it's not possible. Nobody's going to think about that. I bet you it's a mathematical formula that somebody's got, some big thing that fills up a whole chalkboard. So now we're back into, we hit that data point that we're looking for. There's the premium box. Reverse right here. Now we're going short. Now you're short inside this range. Stay on the horse. Bullish, bearish. Downside, 946. Close below 946. Come back in. Use this level as support. Get through that mean threshold. And we're going lower again. And if you're still looking at your 15-minute chart, I know Sandra's gone now, but for the rest of you, what did we say this wick on a 15-minute chart? We didn't want to see it get above 50%. And down she goes. So it's just under 50% of that wick. On a 5-minute chart, what does it look like on a 5-minute chart? Just under 50% of the wick. Watch this level. From here, look for range extension. Look for this to come lower. Things are so much clearer here with the beach as my backdrop. Isn't it just a great way to travel, Derek? When you like to do this kind of travel and trade, it's like the 3 T's of life: travel, trade, and teaching, man. That's what I love. That's my passion. That's my thing. That's what I love to do. So to sit on the beach with your laptop and your margarita and or your cerveza and do some trading, chat with people with your headset on, that's awesome. That's the way to go, man. It's just a way to be. You pay for your trip now, Derek. That's the challenge when you go on vacation is, can I generate enough money to pay for this trip? And now the trip's for free. Then you can put your charts down and enjoy your vacation because it's already paid for. Looking for range extension. And the range extension, who would have thought? Who would have thought just what we said has manifested itself? Like, come on. Now, if we pop back through this level and take out these candles, there's a small little change in direction here, and you're looking for that premium box above you. But for now, let us continue on our southerly adventure, moving southward. A lot different from yesterday's, hey? Only 17 people in here. This is some gold stuff today. This is some magic here today. We get below it, you come back into it, go lower, extend the range, pay yourself. Rejection block, pay yourself. Or out low, I suppose. Now you don't want to see it get back up on top of here and here. That bear trap or bull trap, you want to see that hold now. Unless we pop back through here, then we're looking for that. Otherwise, keep coming lower. That little tiny area right there, my little data point is 941 to 940. And they're overlapping. There's a 940. Well, that really seems to be peeling off here. There's only 16 of you left, so clearly you got tired of listening to me babble away here. I'm looking for 926, 919 next. Looking for this level here. Darren, I have an idea. You and I do a travel group with maybe 4 hours of teaching every day, like those cruises. Yes. Yes, let's do that. I'm all for that, man. I'd love to do like a little cruise and teach for a few hours, pay for their vacation, show people how to pay for their vacation. Crazy fun. Retesting on old low. I want to see that just roll over and keep coming lower. 926. We can come all the way up to that 940 I talked about, to 941. Oh, right there. Bissy. If we get through that on a close, then look for this bull trap to see if it holds. Stay on the horse, man. If you're trading this, you can see how you're going to get your profits eaten up really quick if you're not paying each one of your next low gets taken. Pay yourself. There's a rule there, and you have to be willing to say, I just entered into a trade. You want me to pay myself already? Like within 1 minute of the candle? Like if you were to enter, let's, for some reason, you entered here and you say, I'm aiming for the next low. It's right here. There, you pay yourself. Then all of a sudden it rips back against you and you go, ooh, good thing I paid myself. And where's your stop loss? You move to break even and demand that price keep coming lower. Now there's your swing back. There's your bull trap. So unless you're leaving your stop loss above that, you say that bull trap has to hold price for me. Because if it doesn't, then I'm on the wrong side of it. I'll just get back in sync with it and go higher. So if I do take a small loss there, I can use it to go higher. How you doing today, Shepard? How you feeling, buddy? Is this a good day? Bad day? I wish you could just reach through there and just go doop. Take your pain away, man. Low of the 1025 candle is my target. Low of the 1025 candle is your target. Now they got nice equal lows there, Derek. I like it. That 1026. Bull traps holding still. I like this. Look at that. Wick's doing some damage, but that's still holding. Wait for it to get back below here now. Oh, tired, eh? Get some sleep, man. I'm gonna get some little Z's today. We're going out and see. We're going to a Downton Abbey tonight. We're gonna go check out that movie. I love Maggie Smith. She was an amazing actress. Love that woman. She was Professor McGonagall in the Harry Potter the Witch, if you're kind of wondering. She was amazing. Anyway. Looking. Low taken, pay yourself. Pain's better. Oh, that's good. I'll take tired over pain anytime. My blood pulse is everywhere at times. Stress doesn't help. Oh, Shepard, you're in the wrong business then, man. Unless you can get yourself in a Zen place, you picked one of the worst places to be stress-free. Did you get your 1025, Derek? Did you get the, oh, you got the lows? The 10th, good for you. Derek says, boom, I just paid for my coffee, my Spanish coffee. Stay away from the Spanish fly, Derek. Stay away from the Spanish fly, my friend. It's a family thing. Yeah. They can be stressful. Gotta love them, though. They're yours for life. You gotta love them. You gotta make them work. Choppy chop chop. Not a fun place. Let's go back over here. Let's see if we can find something more delicious to play with. Consolidation. Oil. Booyah. Oh, I should have just left that trade on last night. Nice little run higher. Look at that. I was aiming for this little level right here. What a nice little tag. I would have been happy with that. And then the continuation. And right there is 6 o'clock. Where's the 6 o'clock candle? I want to see if there would have been an entry point. And look at that. Look at that perfect little tap. 6 o'clock. What a nice little zinger. And go higher. You would have had a perfect entry right there at 62.35. Let that baby run. Man, oh man. That would have been a nice run this morning. 62.25, 62.25. That would have been 62.25. Oh, that's way down here. This would have been a nice little run. Was that right? 62.25, 6 o'clock. Oh, forget the 62.25. This one right here. So this is the graded response you hear me talk about, where you say A plus is just as soon as it opens, you catch it and let it go. You put your stop loss down here and just let it run if you've got a higher time frame objective you're aiming for. Or you go, your A level is right there. Your B level is 25% to 50%. C is 75. D is a full fill, and then it fails if we get below that little breaker here, which is buried inside that guy. So you would have had an A level trade and it leaves, and you go, I just want to see that continue to go higher. It comes back, finds support at it, goes higher. You want to see, you don't want to see that get broken to the downside. You have a premium box right here forming. It just comes down, wicks into it, comes down one more time into, no, it doesn't come back into there. Just wicks down into here, trades back through that level right there on a close, comes back, finds support at it. Multiple times it comes back into that level and then continues to push higher. So oil was a nice little trade today. So hopefully you got some joy in that, Craig. With trading, there's no issues. That's what I like to hear. Caused a mini stroke. Oh my God, that must be some heavy family stress. Not when they accuse you of crimes you never did. Just say that. Wow. Wow, that's a tough one to be, tough place to be, man. Sorry to hear that, Shepard. Well, hopefully you can find solace in the candles, my friends. Find solace in the candles. I got two good trades, one up, one down on of the MESS, the 5-minute chart. I had so much consolidation into that. I had to go to 1 minute. Unbelievable. Good for you. I'm glad you got something out of that, Derek. This does not look good. Oh, look, we've got something on the gold. Oh, I would like to see a short right there. Consolidation, displacement, return back into this. I want to see stop loss will go just above that. Above this level here. And I don't want to see any more than that get filled. So see if we roll over here and start coming lower. I'd be targeting, because this is what I was talking to Hadi about. See how there's no bearish candle in here? It's a straight run. You got all this buy side liquidity, or all this BISI fair value gaps is sitting here. So my target would sit. And I'm kind of reaching a few extra ones there. You got this old high there, and then the 50% of that candle, which is also right in here. So that's where I'll be targeting for. Stop loss will be sitting here, and I'm reaching for that for profit. So if you're looking for your R ratio, it's almost like a 4-to-1 ratio. So I can allow this to trade all the way back up into the mean threshold of this, and I start getting nervous if it starts cutting through the mean threshold of that. I go, why? There's nothing up in here that worth hunting for except for a fill of this SIBI or BISI here. And that would be your line. If you're looking for the perfect trade, it would be right there off of that. at 38.15 for a short, and then roll over and go low, and you put your stop loss above that high. And if it starts to run through it, close it out. Close it out. Look at those little piggies. Abs. I don't know if Abs is still here. Oh, he is. Yeah, it's true. Abs, you remember when we were talking about the little pigs on the run higher? Look at that sucker. I think that was our upside objective. We're ripping through the pigs are on the run, man. The pigs are loose. Just shy of $100. Dang, those pigs is running. Soo-wee. Looking for this upside objective here. Coffee, looking for coffee to break this level right here, this consolidation. We came back to this consolidation, right? This, you want to see it come back, tap it and leave. The fact that it's starting to hit into it and eating through the 50% of that range, and then the wick goes through it. The body stops right there. You want to see that reverse, take out this low and keep coming lower. And this bull trap, you want to see the bull trap hold. If that doesn't, if we see this reverse and I'll come back above here, there's your entry off here and this gap to go higher for coffee. If not, look for this one to take out 35 or 358 4 on the downside, and then look for a retest of that level, provided it doesn't take the low, and then look for lower prices. So I've got two different places. I can argue both sides of that right now. So all the time we're inside this little range here. Don't touch it. Don't touch it. Well, Ford, despite the fact that their profits have been eaten up with all this tariff crap and the steel affecting the market, we're still finding support off this breaker. We're back inside it, found support at it, change in direction, found support at it, pushing higher. We're hitting the mean threshold of this candle. Now you want to see this come up, find support at the top of this, the closes and opens of these candles, and then push higher, or get a nice strong candle that blasts through this and get some support on top of that candle. Then you're looking for that to go higher. I'm still waiting for it to get way back here. That may be next year, maybe March, April next year, which is okay by me. I'll wait. Daxicals, look at that. You're in the middle of the range, nothing you can do, and that's a 15-minute chart. Retest. You want to see it start climbing above this little swing point here and using these 8, 9, 7, 9. Got to get above that. Find close above there, come back and use that as support inside that wick and that candle to go higher. For me, looking good, looking good. Gary, if you're listening, way to go. Nice to see the banks are still on a march higher. I like this. This is good support. Support. It's all looking good, man. Nothing's changing yet. Keep her going. Keep going north, man. How's our euros doing? So we have a break above. You come back, find support. Does this work on ES? Or sorry, Forex markets? Hells yeah, look at that. Mean threshold holds price. Fair value gap holds price. Trades higher, comes back into the high of this last up close candle. You want to see this get broken to the upside? It does right there. Comes back, taps it, keeps moving higher. I'm looking for this candle to get taken. And my box, or box to box trading, if you're trading euro dollar, I am looking right there. That's my upside for euro dollar. British pound is flat. Euro is obviously the driver. Euro, British pound. Euro's winning over the British pound. British pound is sideways. Euro is allowed to run. And euro is clearly the stronger one out of the two. So don't worry about the pound. Keep your dollars in the euro. Watch for this wick here, 50%. Look for the lower time frames to see if this 50% holds price, and you start to see a reversal happening here before you reach other, because you're right inside that breaker right now. You see how you've literally come up and you've just taken out the tops right there. Just ran above those, and you've had a nice little pullback. I want to see that 50% close above there and just keep marching higher. Gotta run, D. Thanks. See you all tomorrow. See you later, Derek. Enjoy it, man. I got to do lows today. Spanish fly. That's not part of the skunk and beaver in the animal kingdom you always talk about, is it? Hell no. I don't know if you guys remember it. You guys look up what Spanish fly is. That was back in the day. Man, when I was a kid, we used to hear about Spanish fly. You can look it up. If you're as old as I am, you may understand Spanish fly. Thanks, TC. Tomorrow, Russell, yes, I took the low. Let's see higher prices. Man, you almost got to be trading 15 seconds to get anything in the price action. Yep, I remember. Thanks, T. Waiting for 12:30 Powell speech. Look at that. Ting, ting, ting. Tell me it's not an important level. Like, I'm not telling you crazy. You is crazy if you don't believe that that's a data point. That had nothing to do with, zero to do with news and nothing. It's just at hunting, it's algorithmic data points and the manipulation. Somebody hits the button and it takes off in a different direction, resets. It sets new points, man. See you later, Craig. I think I'm out of here too. I've dropped down to 14 people. If you like what we've done today, 13 people. So hit the like, subscribe button. If you're new, we're here every day for you. So like and subscribe, let your friends know, bring them out. If you're ICT trained, you'll see the logic in what we talk about here. If you're new to the channel and you're new to ICT Concepts, definitely go study his stuff. It's free. It's online. He is the horse. You get it straight from the horse's mouth. Talk to that guy. Well, you won't get a chance to talk to him, but definitely go and check out his stuff online. It's free. Do not pay for it. Do not go hunting for somebody else to teach you what he is presently teaching you for free. Right? There's nobody else out there that understands his concepts better than him. So he's still doing it. He's still doing it for free. Go and see ICT. Don't waste your time with all this other stuff. If you're in here, don't even listen to me. If you're new to this stuff, go check out ICT stuff. Get really familiar with it. Then you can come back in here if you want and see how we're applying the principles that he's taught us. And I'm sticking to some very simple principles that seem to work. And I'm very meticulous over specific data points that I look for. And I'm on a 15-second chart, and I'm on a 1 minute chart. And if I was wrong, you would know. I'm talking about specific data points on a 15-second chart. I can give you a level of accuracy that is stunning. Anybody that tells you that this level down here, this 1 minute, 15-minute level is all chaos, nobody can give you any accuracy. Well, if you're in the show today and you had your eyes open and you were actually listening, you saw unreal. Despite all of this crap, I gave you some laser level analysis. So if you can't see it, come back. I promise you, no one's here to blow out your ego. No one's here to puff up theirs. I'm just here to help you out as much in terms of reading price action as best you can. I take hits. You saw me take hits yesterday. So it happens. Anyway, I love you guys. Thank you so much for tuning in. I really appreciate every one of you. And I will see you bright and early tomorrow. Thanks for tuning in. As usual, I'm sending the love, my friends. Take care of each other. Be kind to each other out there. And Shepard, I hope everything goes well for you, man. Hope the family kind of eases off and sees you for who you are. Okay, man. Much love to all of you guys. Abs, love you, man. Take care. Love to your family and your wife and kids. Hope everybody's okay. We'll see you guys tomorrow.